Thinking about buying your first home but don't know what to do or where to start? Well, stay tuned. Today I'll be talking about the home buying process. Hi y'all, I'm Renee Hunter with Century 21 Premier in Nashville, Tennessee. And thanks for watching. If you haven't already, make sure you subscribe. I add new videos every Friday about the local Middle Tennessee market, schools, things to do, and different attractions in the Nashville and Middle Tennessee area. So what does the home buying process look like? Well, that's what we'll be discussing today. First and foremost, you need to get your finances in order. What's your credit score? Is it above 640? Some lenders can approve buyers that are less than a 640 credit score, but it's going to cost the buyer more. So if you need to, work on your credit score. Do you have a job? How long have you been on that job? Lenders like to see at least 1 year of gainful employment at the same place. Do you have money saved for your down payment? And depending on the type of loan you do, it will depend on the amount of down payment you'll need. For example, with the FHA loan, that's a 3.5% down payment. A conventional loan would be a minimum of 5% down. And if you're active or retired military, then you may qualify for a VA loan, which would be 0 down. Another 0 down payment option for those in a low to moderate income bracket would be a USDA loan or rural development loan. That means the buyer would be buying in a more rural, small town area. And some rural areas in Middle Tennessee are Springfield, White House, Portland, and Westmoreland. Those towns are located in Sumner and Robertson counties. Also, for first-time home buyers in Tennessee, they may qualify for a THDA loan, which is a loan assistance program. For those qualified buyers doing a THDA loan, that would help pay your down payment and or closing costs. And in return, you would have to take a first-time home buyer course through THDA. For more information, click the link below. Do you have money saved for closing costs and prepaids? What? Closing cost? What's that? Closing cost is the money that you would pay for the privilege of using the bank's money. On average in our area, that will be about 3 to 4% of the sales price. Your closing costs will also include the cost of title insurance, the title search, and paying the title company, a third party that would be handling the closing portion of your transaction. In some areas, you can ask a seller to pay all or some of this closing cost fee for you. Some sellers will, some will not, thus they do not have to. Some sellers will take the amount of closing costs that you need and add it to their list price, so they're not out of pocket for your buyer's closing cost. So let's recap. If you're doing an FHA loan, that means you need 3.5% for a down payment. You will also need about that same amount for your closing cost to close out your loan. So altogether, you're looking at about 7%. So let's say you're buying a home that costs $250,000. 3.5% of that would be $8750. So you'll need to double that because you need that same amount for closing cost. So you will need a little money saved up in order to get into your first home. You'll also need to have an emergency fund saved, because now that you will be a new homeowner, you will be responsible for all maintenance and repairs. You will also need earnest or trust money at time of contract. And this varies from region to region, but for example, let's just say $1,000 trust money will be needed at time of contract. This is the money that you're saying in good faith and that you're sincere, saying, Mr. and Ms. Seller, I really like your house. I want you to take it off the market for me, so I'm putting up X amount of dollars of my own money in return that you take your home off the market. The trust money is then deposited into an escrow account either with the real estate company or a title company and will sit there until closing. Your trust money will go towards your purchase, i.e. that means that's less money you bring to the table at closing to go towards your down payment or your closing cost. Some buyers may want to know what happens to their earnest or trust money, or could they lose their earnest or trust money? Most real estate contracts have certain contingencies such as finance contingency, home inspection contingency, and appraisal contingency. All three of these things have to happen in order for you to continue to purchase the home. If something happens, such as it's really crazy on your home inspection report, and you're like, hey, I'm not buying this house, and well, guess what? You can back out of the contract and receive your earnest money back. Or if the home doesn't appraise for the sales price and it's at a lower value, then you can terminate the contract and get your earnest money back. If something happens and you don't qualify after you go under contract, you will receive your earnest money back. So if financing is fine, the home inspection is great, and the appraisal comes back at a good value, and we are moving forward, and you don't show up to closing, then you will lose your earnest money. Moral of the story, show up to closing. The first step before viewing a home in person is to talk with a mortgage loan officer to make sure that you are pre-approved and qualified. And I have great loan officers that I can recommend. Just ask. Then you'll want to hire a realtor to represent you. And when you hire a realtor, they are going to ask, have you been pre-approved or pre-qualified? Because that is very important, because we want to make sure that you are shopping in the right price range. And a seller wants to know that when a buyer comes into their house, that they are a ready, willing, and able buyer, and that they qualify for that amount. Because if the home is listed for $250,000 and you only qualify for $210,000, that will be a problem. As a real estate professional, I want to make sure that my clients are shopping in the correct price range. I don't want you buying a house that you can't afford, where you're having to eat soup and bologna sandwiches the rest of your life and now you're house poor. An agent may also ask you the first time they speak with you or meet is, are you working with any other real estate professionals? And why do agents ask buyers, are you working with any other real estate professional? Because we want to know, have you signed a buyer's rep agreement with someone else? If so, then you are contracted to work with that other agent. So the next step would be hiring a real estate professional or a buyer's representative. And did you know it's free to hire a real estate professional? Yes, the listing agent working for the seller has already negotiated compensation that will be divided between both real estate offices. So that seller is actually paying for their agent plus the buyer's agent and brokerage. You will want to pick someone that is local and knows the market and the current trends in that area. This person will be representing you during your largest transaction, so you want someone that you can trust. Be sure the agent has knowledge and great sales skills to get the best deal for you without compromising their integrity or ethics, because you definitely don't want someone that's going to take shortcuts. And if they take shortcuts, then they're probably not returning calls, texts, or email, and you can never get a hold of them. Who wants that? So don't just settle for any agent like your best friend's cousin that just got their license 2 months ago. Find an agent that has time to work for you. Some agents are very busy, and after the first initial meeting, they may hand you off to a team member or a licensed assistant, and then you won't see that team leader or the head agent until closing time. Other agents are picky and only work with buyers in certain elite price ranges. FYI, I'm not picky. I work with all buyers and sellers. Oh, and by the way, realtors don't get paid for the number of homes they show buyers. They get paid for bringing buyers and sellers together, making sure the deal stays together through closing, and at the end of the transaction is when your agent will get paid. You'll want to ask your agent, do you mainly work with buyers or sellers or both? How many buyers do you work with at a time? Because there's only so many hours in the day, so they can't have a large inventory of buyers that they're working with at one time. And if they do, then they are part of a team. Are you full-time or part-time? Do you show homes on the weekend? Are you available after work hours? You can also ask for reviews from past clients. What does the buyer's agent do for buyers besides locate the perfect home? Well, they would fill out all necessary real estate forms and contracts. They would put you in contact with local lenders, inspectors, and title companies and attorneys. But most importantly, a buyer's rep agent will have a fiduciary duty to uphold your best interest as a buyer. They would negotiate for you, provide you professional real estate advice, and keep any personal information confidential. All the duties that a buyer's rep agent would do would be to benefit you, the buyer. In other words, not working for the seller. Just remember, the agent that has the sign in the yard is contracted to work for the seller and uphold their best interest. Disclaimer notice: the professionals that I recommend to my clients, such as lenders, inspectors, title companies, and any other vendors that will be needed during the real estate transaction, or someone that I work with closely on a regular day-to-day basis. I know them, I like them, and I trust them, not only to handle my clients' transaction, but to handle my personal real estate deals as well. I hope you enjoyed today's video, the home buying process, about getting your finances in order, being pre-approved, and how to hire a real estate professional. Stay tuned for part 2. I'm Renee Hunter with Century 21 Premier in Nashville, Tennessee. Bye, y'all.